Recession talk returned this week with the Nasdaq 100 sliding on the back of an unexpected jump in the US services PMI for November, which came in better than expected at 56.5 when 53.1 was expected. The better than expected economic report could point to the Fed raising rates for longer, which is bad news for stocks. There's a divergence at the moment. Manufacturing is already in recession with the equivalent PMI reading in contraction. Now, contraction is when the reading is below 50. Services, however, continues to remain in expansion, being above 50, but we'll have to see how long that lasts into the new year. Now, services activity increasing in November caught the market out, and that is what set the tone for the week. Now, 50 basis points is still on the cards for next week's Fed meeting, but could rates remain higher? Does the Fed need to do more in the new year? This is what the bond markets are asking the question of, with the 10-year yield remaining elevated. If you look at this chart, the 2-year versus the 10-year yield hasn't been this inverted since the 80s and is a leading indicator for a recession. Back to the daily chart, you can see on Tuesday price continued to head lower as big bank CEOs warn on the economy. Firstly, JP Morgan CEO Jamie Dimon reiterated his view of potential recession next year, while Citigroup CEO also sounded the alarm on a recession. This pushed risk assets lower and the Nasdaq 100 touched the 11,480 support level. Wednesday saw price briefly breach the 11,480 support level only to recover and close right on it. Thursday saw a rebound in price as buyers jumped in at this key support level. Price rebounded to the next level above at 11,680, which was tagged again on Friday. However, price came off this resistance level following the stronger than expected US producer prices index, which saw tech stocks sell off. Price is now beginning to trade level to level, and both the 11,680 resistance and 11,480 support has been tested, with both levels holding. Now, if you look at the weekly chart, you'll see price closed above this key trend line around 11,940. Remember, this trend is rising, so week by week this resistance increases slightly. Last week price closed above it, only for it to come back off this week, trapping bulls. It's really important we see follow through if there is a weekly close above this trend, else it just remains a short covering rally. The brief collapse in price below Wednesday's support on the daily here, you can see why it hit that level and rebounded, because price found the 200-week moving average and rebounded. In terms of levels to watch next week, back on the daily chart, the two levels in play at the moment will be key: 11,480 as support and 11,680 as resistance. If we break below 11,480, 11,420 being the 200-week moving average is next, followed by 11,180. Above 11,680 would pave the way for another shot at the 200-day moving average, around 12,064. The way price closed the week on Friday does point a bias to the downside, but first 11,480 and 11,420 are the key support levels. Next week is big, with CPI numbers released on Tuesday followed by the Fed rate decision the following day. Expect it to be a volatile week with big movements in either direction, depending on one, whether CPI beats or misses estimates, and Powell's press conference on whether he continues to talk about slowing rate hikes. With that said, thanks for watching. Remember to hit that subscribe button so you don't miss out on future content, and I'll see you at the next one.